Welcome to, I think it's my third webinar on Profit First, and also pleased to tell you that we've got sort of one of the clients who's actually using Profit First towards the end of the presentation, so it'd be good to sort of hold on and listen to what he's got to say about Profit First, and I'll ask him some questions. So bit of housekeeping. If you've got any questions, then in Zoom, most people now are used to how this works. There's a Q&A button. If you can write some questions in there, then Ashley will answer them at the end of this presentation. And again, if you see any questions already asked, then please click on the thumbs up so we don't have to repeat the questions. I might be brave at the end, and depends how many people are sitting in, to maybe unmute everybody and see if people have got questions that they want to ask at the end. Sometimes it's easier rather than typing away. So, Profit First. This is a book that I came across, must be now 3 years ago, via a client of mine, Lee Ashton, who runs a sales company. And she knew I was interested in business books and helping clients grow. And she said, have you come across Profit First? By Mike somebody, because she couldn't pronounce his surname either. And to this day, I still can't pronounce his surname, but Mike McAlowicz wrote this book, and it's a really good book. It's about his story of how he run a business. His business didn't go so well. He started another business and discovered that the traditional accounting model really wasn't fit for purpose for SMEs to actually run their business and be profitable, and obviously keeping an eye on the cash flow. He's got podcasts, lots of audibles, and his website. If you're interested, go to the website. But the first thing I would say is order the book from Amazon and read the book. We've actually got some chapter giveaways. If you want to maybe put it in the chat or the Q&A, we can email you some of the chapter giveaways, which is really good as a summary of how Profit First works. So before I even start talking to clients about Profit First, I ask them 3 questions. And these are the 3 questions. Are you tired of working hard and not seeing results in your bank? Do you often find yourself wondering where all the cash is going? I think that applies to everybody. And are you constantly chasing after that one big sale that will make everything better in your business? And normally what happens is, normally I get 3 yeses, and the 3 yeses pretty much confirm that most business owners seem to have the same struggles all the time. Those 3 questions are pretty much common amongst business owners. They work really hard and see very little financial reward for the risk that they take running their business. And I asked the business owners, look, if you wrote down how many hours you work and the money you get in return, do you think that's fit for the amount of hours you put in? And most people would say no. Most people say yes. Obviously, don't need Profit First because they've obviously cracked it and running their business profitably and very cash rich. Also, when it comes to running a business, decisions like how much to pay yourself, when to hire staff, or how to handle cash flow can leave even those savviest of entrepreneurs doubting their ability to run a healthy business. So clarity is essential in every financial choice you make. And what we found is that Profit First is a proven process that's helped business owners all across the States, and the UK is now becoming very popular, to simplify the business end of their office and start getting generous profits that obviously every business wants and deserves. So how does it work? What's it based on? So it's based on sort of changing the formula, the formula that everyone knows. Sales minus expenses is equals profit. And what he discovered, Mike, was that the formula doesn't work because it just focuses on the numbers. It doesn't take into account human behavior whatsoever. So it's purely a binary results of how your business is performing. So what he discovered is that when a business generates cash flow and is working really hard, and deposits start increasing and money in the bank account starts getting bigger and bigger and bigger, what he's found is that spending goes up in line with the money that you're receiving. So as you get more money in, you spend more, and vice versa. As deposits drop, you then look and you start cutting out costs that you obviously cannot afford. And he calls this Parkinson's Law. So it's a demand upon a resource tends to expand to match the supply of that resource. And also, we know that all business owners should be reading their profit and loss, their cash flow and balance sheets on a regular basis. They should be conducting financial analysis and reconciling ledgers on an ongoing basis. Xero and QuickBooks Online and the cloud packages has helped enable us to do that, but not everybody does that. But what we have found, and what every business owner does, they check their bank balance online constantly. And what they're doing, they're making business decisions on what their bank balance looks like on a daily or weekly basis. So you can see where there's obviously issues with that, and we've got to make sure that we've got a system, which is what Profit First does, to make sure that if you're using your bank as your reporting structure, that you've then taken account of future costs. Now, with Parkinson's Law, and a good example of Parkinson's Law, so you're wondering why there's a toothpaste on the screen, but basically it says that at the beginning, when you get your toothpaste, it's brand new, you're sort of spreading it all over the toothpaste and the toothbrush, and you're not sort of watching how much you're putting on there. And it's only when you get right to the bottom that you're squeezing that toothpaste out, and you're trying to get as much out of that as you possibly can. And that's Parkinson's Law. Similar, if you've got a budget for doing house renovations of, I don't know, 10 grand, you will use that budget. I don't know, I haven't seen any DIY program or interior program or anybody saying, yes, we had a 10 grand budget and we were really good and we only spent 8. How many times it ends up 15 grand? Oh, we went over budget and we blew our contingency the first day, we spend 15, 20 grand. The same applies here. It's using that same sort of behavior. If you've got 10 grand in your bank account, oh great, I can spend it. What can I spend it on? Oh yeah, I need that bit of equipment, I need that, I need that. So that's Parkinson's Law, and that's what a lot of Profit First is built around. So what's the fix? The fix is to take your profit always first. And then what happens is Parkinson's Law becomes your friend and ally rather than your enemy. You're forced to grow your business off the remainder. So you get the sales and you take your profit first, and what's left is your expenses, your overheads, and that's what you've got to run your business and make business decisions of what's left in your bank account. Bank balance becomes then a highly effective method of managing your finances. So you're now looking at your bank balances, knowing that everything's in order. You've got money put aside for the tax, you've got money put aside for yourself, there's money in there for profit because you're taking that first. And there should be enough money to pay the overheads. And the thing then becomes very intuitive, and you become to grow the business based on what is in your bank accounts. So this is how it starts. So your initial setup, you need to set up at least 5 bank accounts. Now, in the UK, what we've discovered is that if you set up savings accounts, the bank don't charge you for opening up those extra accounts. If you have them as like current accounts where you can pay from that account, they will charge you. They see that as an extra current account, and you will then quite quickly rack up the fees. So what we've found is that having savings accounts works fine. You just need to then obviously transfer the money back out of those savings accounts when you need to pay either tax or yourself or the profit. So it's not a massive issue. So they're the 5 accounts. You have an income account where all your money, all your obviously your income goes into. You have a profit account, taxes, owners' comp, and OPEX, your operating expenses. And I'll explain how those work a little bit later. Bank 2 is where we're trying to stop the temptation of dipping in to those other accounts. Obviously, if it's all within the same bank on your same internet banking, it's very, very easy. Or I'm a bit short in my OPEX account to pay that bill. Or let me borrow it from the taxes account and I'll pay it back next week. And you know, next week never happens. So what they say is that open up your profit in your taxes account at another bank where it's really hard to get hold of that money. So if it's an internet bank, you give your internet login details to somebody and you say, only on death, you need to give me those details. So it makes it really hard. Once that money's gone, then it's gone. It's hard to get back. Determine your caps. Your caps are your current allocation percentages. So where are we today? So let's look at the previous year's accounts. Let's look at the management accounts. Where are we today? So profit is 1% of our income. Our taxes is 20%. Owner's comp 50. Owner's comp is your owner's pay, salary, dividends. OPEX, your operating expenses, 29%. That's where we are today. Then we've got to look forward. Right, where do we want to go in the future? What are our target? Okay, 1% is pitiful. We need to be hitting at least 10% profit. So we need to increase it by 9%. Our taxes is fine. 20% covers our VAT, our PAYE, our corp tax. So we're fine with that. Owner's comp, be nice to have a little bit of a pay rise. Let's increase it to 5%. Obviously, it's got to add up to 100%. Where's it coming from? It has to come from your OPEX. So your OPEX drops from 29 to 15%, which is very interesting because then that brings a whole load of conversations out of, oh my God, I can't afford to cut my operating expenses by that amount. What should I do? And then in those instances, we really do look at, right, okay, you've got to look at your overheads, you've got to look at your operating expenses. We've got a template we can give you if you want it, but basically all you do is just list all your expenses that go out, look to see if you can get a cheaper supplier, look to see if you actually need that overhead, because it's amazing how many monthly subscriptions people subscribe to and forget and don't cancel it, or can you negotiate a better deal with that person. So it's amazing when you've got to cut your OPEX expense, your OPEX, because you know you want to increase your profit, you know you want to increase your comp, your owner's comp. It makes you really look at those costs in a different light, and maybe you make have those difficult conversations with suppliers. So that's where that's the starting point. So that's our initial setup. And then what we do is look at those target allocation percentages and see if it's reasonable. Does it work based on the income that's coming in? What we have found is that sometimes the previous year's accounts are just not relevant because of the pandemic and the business might have changed completely. You do need to then think, okay, let's not even look at them. Let's look at the forecasts. Let's look at our forecasts going forward because the business has changed so much, and apply them as our target allocation percentages. So it's quite important to try and get those percentages. And the beauty of it, you tweak them as well. It's not set in stone. If after a couple of weeks you find that the profit at 10%, we were just over ambitious because something's happened in the business, yeah, let's just cut it back. So it's very flexible when you're trying to implement this day one. And I always find that for the first month, you are sort of finding your feet and you're running it little bit experimental just to get a feel and just change the way you run the business and the mindset of looking at making sure that cash is coming into the business really quickly. Any old customers are not delaying payment because you want to get that money in quickly, because getting the money in quickly enables you to do the percentages. So a lot of stuff happens as we discussed that. So this is straight from the book, and as you can see, it's in dollars, but it's fairly relevant, and we use this as a guide when we start doing the allocation percentages. So based on the real revenue. Now, real revenue is quite important. Real revenue is basically your gross profit. If you're buying goods or services that are directly related to sales, that's the figure we use as our revenue, and all the percentages are based on the real revenue figure. There's no point having a £5 million turnover company when you're spending £4.5 million on materials, subcontractors and services directly relating to that supplying that goods or service, because that's your real revenue. So these are the percentages that they recommend. 5% for the smaller businesses as a profit, and as it grows, the profit gets bigger. Owners pay quite high at the beginning and it drops away. The tax is pretty consistent. We found 15% is about right in the UK for corp tax and VAT, and then operating expenses. As the business gets bigger, operating expenses no doubt gets bigger as well. So and that's just the guide that we use. So what happens at the 10th and the 25th of each month? So the whole idea is that you get into a routine of looking at the finances and paying bills and doing your allocations into each bank account. So as you can see, you've got £5,000 coming in, say for that week. When you do your allocation on the 10th of that month, you're going to move your 50 quid into your profit account. You're going to move £1,000 into your tax account, 2.5 in your owner's comp account, and you're going to be left with 1450 in your operating expenses account. As you can see, profit is first, then tax, owner's comp, and then OPEX, and that's quite important. Obviously, doing it in that order. You can see where it's going. The profit is to the savings account, tax personal bank account is to you, and OPEX is left, which is covering the expenses and bills, which is payroll, credit cards, travel, etc. So the idea is to transfer money from those based on the target allocations, which we've done. And the idea is that you pay all your bills on the 10th and 25th of each month. So not ad hoc or as and when people shout and pay and scream for the bills. You get into a mindset. The 10th and 25th are the days that we pay all our bills, and you tell your suppliers. You use the credit they give you. I had a client that we did Profit First a few months ago, and basically he was paying the bills as he was getting the bill. He wasn't even using the 30-day. Wasn't even using the 30-day credit. And as soon as we said, look, you should, if they're giving you 30 days, use 30 days, because it just helps your cash flow. It helps you manage the business a lot easier. So obviously, standing orders and direct debits, you need to know what standing orders and direct debits are coming out of the business, because you've got to have enough money in the OPEX account when you do your allocations to make sure that they're covered. So that's really important. So it's a bit of a mindset, and again, you've got to get your hands dirty in the finances. You've got to know what is coming out of your business on a daily basis, because you've got to know and be really on top of it. And that's sort of the challenge some business owners find. They're not really finance people, and they're sort of don't really want to get their hands dirty. But to implement this, you do need to do that. And I make that very clear when I'm speaking to clients when we first talk about this. And then what happens every quarter? At the end of the quarter, you've got your money in your bank accounts, and the idea in your profit account is you take 50% of your profit and you pay yourself a bonus, a dividend bonus, or through the salary. But the idea is to reward yourself out of the profit account for doing this, for doing the hard work, for segregating the profit out of the business and making it available to yourself. The rest of the 50% that's in the profit account, you can leave in there as a sort of a buffer or a slush fund, or you want to maybe invest in some plant and machinery or whatever. So I've got clients who don't particularly want to take the bonus, we'll leave it in there and have it as a buffer. Some have taken the whole lot out. So it all depends on what you want to do, but it's a good habit to get into, of actually drawing that out. Obviously pay your taxes that are due each quarter, the VAT. And obviously review the percentages, making sure those percentages are reasonable. And again, I've had instances where the profit maybe isn't high enough, and we're looking to increase the profit percentage for the following quarter. So really important to do that at the same time. So what's the fix? So the fix is always take your profit first, always, always, always. So you do your profit assessment, and I'll show you an example of a profit assessment that we put together, showing the previous 3 years and getting the feel for where we are now, and obviously a plan on how we want to get to our target. You need to set up your bank accounts, and you need to start obviously allocating percentages to your profit and to the other bank accounts once we're ready to crack on with this. Quarterly review, you look at your owner's pay, other improvements, and you look at maximising efficiencies and innovations in your business if that's what's needed. So the profit assessment, the profit assessment shows the current allocation percentages based on previous accounts, as I said, and where we want to go. So all being well, if this all works, you should be able to see. Sure. Ash, can you confirm you can see that profit assessment?
Yeah, confirmed.
Thank you. So this is a profit assessment for obviously the Avengers Limited that we act for. And the idea is that we get the account, so that you've got 3 years accounts here. So you look at the average for the 3 years, and as you can see, I was talking about the real revenue. So you work out what your materials and subcontractors are. So basically he's made the cost of 30% direct costs to get his real revenue. So we're working on 70% GP, gross profit. But as you see, we use the real revenue as 100% because that's what our net cost, our net gain in the business is. Look at the profit figure, he's only earning 2% revenue. The Avengers are obviously doing very well the last 3 years. He's only earning 2% profit, 1 year was a loss, so not very good. Owners pay 16%, a bit on the low side. Tax and VAT about right, 15% OPEX, really high at 52%. So there is actual figures. And then what we do, we look at, right, what did Profit First suggest? That's that graph I showed you before there, that's what they suggest. That's in pounds what we should be putting away. So 15% of 315, it should be £47,000 profit, not 5.5 grand. We've agreed 10%. So 15 is too much of a jump, we felt, and we can achieve 10%, 31 grand of the real revenue rather than the 5.5 grand. And the same with owners pay and all the other things here. Now, what's quite interesting is this one, the debt, HP and the bounce back loan. So Avengers Limited has quite a large hire purchase agreement for some machinery it bought. And what we want to do, because it's a big chunk, as you can see, it's 20% of real revenue is attributable to these. But we've opened another bank account, a separate bank account called the debt account, and we make sure that 20% of the real revenue is transferred into that account to cover the HP and the bounce back loan repayments when they start. That comes out of, obviously, out of the OPEX account. Do you see what I mean? So you need to pay that, and you've got to make sure that's paid the same as your tax, you're only paying profit. What we also find is that some people, where they're a service industry and their wages is a big cost, we will open up a separate wages account. We work out what the percentage that's needed of the revenue to cover the wages, and that becomes a separate allocation. So you could potentially have 6 or 7 bank accounts. But obviously what you then have left is your OPEX account. Your OPEX is your balancing figure. So you've got to make sure that the 110 grand here is enough, which is 35% of the real revenue, is enough to cover the overheads for that business. If it's not, then there's an issue. You've got to review your overheads. You've got to look at, can we cut costs? Are we overstaffed? Do we need to move premises to cheaper premises? Because we've all agreed that we want the profit at 10%. Owners pay, we want a 20%. We don't want to cut our money that we take. We need to cover the tax. We need to cover the debt. It's got to be OPEX that we've got to cut. We make some difficult decisions. And then what we did at the beginning when we started implementing this, we looked at this over a year, and a year now with the pandemic, it's just so far in the future. You don't know what's going to happen sort of next week, talk about a year's time. So what we do, we've broken it down into like a 90-day world. So we look at, right, what can we achieve in the next 90 days? Right, so in this business, it was 2%. And we're going to make really small incremental changes each month. So we're going to go from 3% first month, increase to 4%, and then 5% month 3. The idea is to get to 10% over the next 12 months by maybe 1% each month towards, and to get to that 10% in a year's time. This is a long-term strategy. This is not an overnight fix. You've got to do this slowly but surely, a bit like it's a marathon, not a sprint type of thing, that you want to get to your 10%. If you did that, if you did 10% month 1, and you could not afford it, the business maybe had a slow month, slow couple of weeks, you could not afford to put 10% in, and you said, right, the system's not working, I'm not doing this anymore, what a waste of time. It's not the system, it's that we've just jumped too quickly, too fast. 1% is manageable. Getting into that mindset, looking at your finances every 2 weeks, paying your bills, looking at your allocations, and the end of the 90 days, you'll go, my God, like I've got 5 or 6 grand in the profit account that I would not have had, because I would have spent it in my OPEX account on, I don't know, restaurants and stuff that I don't particularly need because the money was there. So the same with all the other costs. Owners pay, we moved from 16 to, our target is 30% at the end of the year. So we go from 16 to 18 to 20 to 22. And the same with the tax. We're happy with the tax figure. And obviously we're going to cut our operating expenses month by month. Again, looking at why we can't cut our costs day one from 52 to 35%. It's just impossible. We need to make small changes, and that's what this shows you. And there's just some nice graphs and explains how we go about actually putting money into the profit account and how we can do that. So that's the actual assessment. And then what we do is every 2 weeks we use this report, which is quite a nice spreadsheet. Basically, all we've done is taken those percentages that we've agreed in the report, put it on a spreadsheet, and look to, and you just enter in there in blue, like what we've taken in the last 2 weeks. Okay, we took 23.5 grand. We need to put 21% into our materials and subs, because that's what we need to pay, and that's what we've worked out as our margin. And then obviously these balances, these figures add up to 100%, and these are the allocations that we need to make. We then, this is an example of one we've already done, and you can see all these previous 2 weeks allocations and how much is being put into the profit account and what's in the balance at the time. And obviously always sense checking it to make sure there's enough in the OPEX account to cover the diet debits and standing orders, and we then make sure that we have a list of the diet debits and standing orders that are going out there as well. So that's quite important, and that's what we use every 2 weeks to sit and go through and say, right, okay, have we had a good 2 weeks? Bankings, yes, brilliant. We've had a good 2 weeks. We've got enough money in our wages account. We've got enough money to cover our OPEX account. Everything's working smoothly. It's normally where you have a really slow 2 week banking scenario that it becomes really tight. You think, oh crikey, look, I haven't got enough in my OPEX account. What do we do? And we have that whole conversation of how we can manage that scenario. So also what this does, it really highlights the importance of getting money in quickly from your customers. I've got one example that Josh won't mind me talking about, but he's got a nice big contract, but payment terms are horrendous. They're sort of paying on, I think, 70 or 90 days. So from a cash point of view, that really makes life very difficult, especially if they start ordering more and more. And we did sort of highlight that issue, is that if you, okay, fine, you've raised the sales invoice, but you physically haven't got the cash to pay your suppliers. What do we do? And we had that whole conversation. So this just really highlights the importance of getting cash in from your customers. So making you accountable. So the whole point is sticking with it, making you accountable to myself every 2 weeks or weekly or monthly, whatever we decide. But literally it is a matter of, okay, let's set up these meetings the next 3 months in advance. I know I've got to speak to you. I know I've got to go through the figures, and it's just making you accountable and making you implement this, because you know that it's going to work. You know the importance of getting this done. And it's like anything, isn't it? I compare this to going to the gym. When you've paid somebody to have training sessions and you've got it in the diary, it forces you to go. Even if you feel crap, you've had a bad day, oh, I'm going to go, because otherwise the guy's going to sit there and not do anything, and I know the benefit to me if I go. It's the same with this, with the business. If you know you got someone on the end of the call trying to help you, and you're paying for that service, then you're more likely to do it, rather than going, oh yeah, okay, I'll do it tomorrow, and tomorrow never comes, and it all becomes a bit messy. So this is really nice, a case study of a business that I helped, it must be a good 18 months ago, my first profit first case, and it was just a perfect business that we helped set up. So second-hand musical instrument repair centre was actually in Finland. An English guy went out there and set this up. He'd already done the hard work setting up the bank accounts, and he tried to implement profit first, and he just failed miserably. He just didn't have, I think, that accountability. So we started going through and we discovered what his pain points are. He never had enough money to pay the tax, always in arrears, not paying himself enough, didn't have a clue what the finances were doing because the accounts were so late getting stuff to him. And also he wanted to buy stuff at auction. He knew that he would get better margins, better equipment at the auctions, but never ever had the money when the auctions came round. So we sat down, worked out what his target allocations were. Again, this was a really good example of, oh my God, I can't afford, I've got too many overheads for the allocation percentages that we've agreed. We've reviewed all his overheads and he saved himself 15 grand. So he spoke to his landlord, he made deals with suppliers, and he was so proud when he showed me the spreadsheet that I've saved 15 grand. I would never have done that without even looking at this. So that wasn't enough. We were still short of the allocation percentages, and then we just had a chat about when did you last increase your prices. And he said, I haven't done it for years. He just didn't feel confident on putting his prices up. And I said, look, you haven't really got much choice. The quick win is to put your prices up. And he did the next day, up 5%, didn't have any kickback at all. And we worked out over the next year, he was going to put 10 grand straight on the profit by just putting his prices up. Even if he lost a few clients and a few customers, he still earned more money by doing that. So what we found, that 25 grand over the year was enough to then hit the target allocation percentage for his OPEX, his operating expenses. We met every 2 weeks to ensure he actually did the allocations. He actually wanted to do that because he actually made him do it. He actually opened his online bank and said, right, I've done that transfer, what's the next one? And we sort of went through it like that, which was great. And he actually set up an auction account. And in the end, we ended up, I think it was about 5 grand when the first auction came round. He went and bought stuff that he'd never done before and turned that 5 grand into, I think, about 15 grand sales. So it was great that he just felt that he could do that. As a result, he had more funds to pay the taxes. So he got up to date with the tax, paying more to himself, and he felt control of his business for the first time. So that was just a lovely example and worked really well. So what are the key benefits of the system? You rest easy knowing the business is fully equipped and prepared for any financial scenario that comes your way. You receive a healthy return for your life's biggest investment in the business. Feel settled now that the business is running strong and reaping the rewards. So they're the key benefits. These are the 4 most common questions I come. Every time I do this presentation, the 4 questions always seem to come up. So I thought, look, let me just put it in there. Let me put it out there. I'm sure some of you are already thinking about this. If I have some old supplier invoice outstanding to be paid when I start, how do I deal with those? Now, on that example, the profit assessment, we set up a debt account. That debt account was to cover loans and any other debt. Old supplier invoices is classed as debt. So if you're sitting on some old supplier invoices that maybe more than 90 days old and you just can't get around to paying them, they go into a debt account, and you then speak to the supplier and say, look, pandemic, everything else, look, let's do a payment plan. Can I pay that off over the next 6 months, 9 months, 12 months, 3 months, wherever you can get the best deal you can get? Then you know, okay, I've got 3 of those suppliers in that debt account. I know how much I need to put in there each month, each week, each 2 weeks to cover that payment that I've agreed with them. Then you can work your percentage out based on your predicted income that's coming in, and you know that debt is then being dealt with, and you're beginning to clear some of the old debt. That's really important as well, because otherwise you can't, if you don't separate it into a debt account, you can't do your allocations out of your current earnings and those percentages that we've agreed, which covers your sort of current costs as well as clearing the old debt. So that's really important, and I've seen clients use that, and it seems to work. More bank accounts result in a lot more bookkeeping work. Is profit first really worth the effort? I would say definitely not. Using zero most people here should be using a cloud-based bookkeeping system where the bank feeds are coming in automatically. No, there's no more paperwork, because it's just doing it automatically. Okay, you might have to reconcile a few more bank accounts at the end of each month, but again, if the bank feeds are working properly, there's no issue. So 3, why should I allocate money from the income account to the profit, tax, owner's comp and OPEX account on the 10th and 25th instead of daily or as needed? Look, if you're doing it daily or as needed, you're not running the system. You might as well carry on as you are and not getting the benefits of it. It's really important that you stick to the 10th and 25th or whatever days you decide. Really, really important. And it will show that it's working. If you're just dipping in, dipping out, paying as needed, it doesn't work. You might as well use the old system. So again, that's really important to keep to that mindset and routine of doing that. So number 4, so this, a few people have asked me this, where do I pull the money from if I don't have enough money to pay expenses from my OPEX account? Look, if you haven't, when we've done the allocations and we've gone through and said, yeah, I think 20% should cover my operating expenses if my income is this, and we find that 20% is not enough, and you keep raiding the other bank accounts on a regular basis, then there's a bigger problem with the business. So we then ditch profit first, because we've got to look at the business. Do we need to increase the marketing spend to get some more sales in? Do we look at increasing prices? Do we look at, there's lots of other bits that we need to maybe do, because the business isn't strong enough to pay the profit that you want and the amount of money that you want to take out of the business. If you're happy to draw 2% profit, then it'll work. But who wants 2% profit for the effort they put into the business? So that's quite important. And thankfully, so far, I haven't had any issues yet where there's not enough money in the OPEX account on an ongoing basis. Right. So, Josh, are you there? Hopefully, Josh from Skylight might be.
Yeah, I'm here. I'm here, mate. Yeah.
Cool. I hope I haven't bored you too much. Have you just joined?
Yeah, I've just had you on mute. No, I'm joking. No, I ain't.
So Josh is one of the directors from Skylight Office Supplies. Been working with Josh the last few months now, I think.
Yeah, since the start of the year.
Yeah. We did discuss it a long time ago, didn't we? We just didn't get around to actually implementing.
Yeah, I read the book probably over a year ago now, 18 months ago. And yeah, to be fair, I put it off, but I should have done it a lot sooner.
So, Josh just needed a bit of help with understanding his figures. Obviously, lockdown was tough for you guys. Obviously, all the offices were shut, and nobody was buying any office supplies from you. So I've just got a couple of questions which shouldn't test you too much about Profit First and what benefit you've got from it.
Yep.
Since implementing it, what benefit have you seen from implementing Profit First?
Initially, it's pushed us to negotiate better with our suppliers, whether that be longer credit terms, cheaper prices. The OPEX account has obviously made us, or helped us run our business for a lot less than what we was running it for. A few things we were paying for which we probably didn't need to. Probably paying suppliers too soon as well. Really taking advantage of the 30 days. Some of our suppliers give us 40 days, 45 days. So yeah, that's one of the main benefits. Time saved us a lot of time. We used to spend sort of hours managing the money to pay suppliers, but since it's all been left in that one supplier's pot, you know, every fortnight, everyone's got to be paid on that day. What else? And the other pots have sort of built up cushions. So if we was ever to experience sort of short-term losses, which we probably did throughout COVID, the cushions in all the other pots sort of help you cover any losses. And then just our business finances as a whole are much more organised than they were in one pot.
Did you take, because normally it's on the calendar quarters, did you take some profit out last quarter? Yeah,
that was the first one. Yeah. So again, we've been able to take more, and we can already still see the profit pot building up for the next quarter. I think we're on 10% profit, which is nice.
And at the beginning, and I make that really clear to a lot of people when we start, it is quite time consuming at the beginning, and you need to really get your hands dirty. Did you find that hard at the beginning?
Yeah, that's probably why we put it off, because for so long I was after reading it. Obviously, think when you watch the your thing and everything, and it's 5 bank accounts, and you need it, you think, oh god. But it's literally, as soon as you've done that, contact the bank, open up the savings accounts. Like you say, it's pretty straightforward. Obviously, we still sit down with you majority of the time and go through it just to make sure it all matches. But yeah, once you're rolling with it after a month or two, it's pretty straightforward.
Once you got into the system now, nice that I can fall away.
Obviously, sometimes at the start you're tweaking the percentages, aren't you, if you haven't got enough in the OPEX or etc. But yeah, slowly but surely it all adds up.
And obviously paying the taxes as well. And I know, I think at the beginning it was a bit scary when you set up the business. When's all the
obviously after our first year, when the corporation tax comes and hits you, it's a bit of a shock. But because obviously we've only been going 2 and a bit years. But yeah, we've obviously only had one VAT bill come round since we've been doing it. But again, there was more than enough in there to cover it. Our next one's due shortly, and there's already enough in there to cover that with stuff left over as well. So you're not panicking trying to find the X amount of money when the tax bill comes round, which is nice.
Really good. And also, I did mention that you might have not heard it, but in the presentation about where you've got customers taking 90 days to pay you.
Yeah, the larger one. Yeah. Well, yeah, it's obviously quite new, so we're yet to see how that's going to affect it at the minute. But yeah, 75 days they want to pay us in. So.
Yeah. Anything else on Property First that you think anyone else listening would?
The main thing I think is being able to take more for yourself. Obviously, I weren't taking mad amounts of money to begin with because it's still quite a new business. But obviously, the profit pot is nice to have every quarter. I've only experienced it once, but I'm looking forward to the next ones. That's the main thing, really, just getting more for yourself rather than sitting there stressing over your business and not actually taking as much as you probably deserve.
It does focus you, doesn't it, on getting those customers to pay you quickly? And it does
actively chasing money. That's made us do that a lot more as well. We was probably leaving invoices overdue for a lot longer than they probably should have been. But now when you need to get X amount of money in every 2 weeks, it does actively make you pick up the phone more and chase them. Yeah.
Cool. And if anyone wants any office supplies, then Josh is your man.
Yeah. How many in this? 10? Yeah, 10 new clients here. Lee will give you a discount on your Profit First meetings.
Much appreciated. Thanks for your time.
Cheers, Lee. Thank you.
So I think that's good just to see Josh has used it and read the book and sort of delayed implementing it, but I don't think he will then go back to the way he was before. So that's a good example. Someone doing it in-house. Now, this is nice as well. We got actually we got Mike to do us a nice video, which he just talks about very quickly about Raffingers and why you should implement it. So I think I'll play that to you guys as well.
The most important element of any business is its profitability. In fact, profitability translates into sustainability. I suspect it's the reason you started your business in the first place. Well, you've come to the right site. Lee Manning and the team at Raffingers is certified in Profit First. In fact, they're one of the few firms in the UK that become certified in this methodology. My name is Mike McAllowitz. I am the author of Profit First. I'm proud to say that Lee and his team have become certified in this process and are ready to deliver it to you. So if you're serious about profitability, you've come to the right place. Just hire Raffingers.
Even when he says I still can't. So, right, any questions? I think Ash, you're around.
Hey guys, if you've got any questions, if you could just pop them into the Q&A and I will work through getting Lee to answer those questions. I'll give it a minute or so, and if we get no questions through, then obviously feel free to email us. You can email Lee directly at lee.manning@raffingers.co.uk, myself at ashley.bloom@raffingers.co.uk, or info@raffingers.co.uk. and we can answer any questions that way as well. Lee can offer profit first assessments and kind of an initial profit first meeting with you guys. So if anyone is interested in just finding out more about the methodology, then definitely get in touch with Lee, because he can book some time in with you. Anything from kind of a 15-minute to an hour session to go through kind of a little bit more detail if you want about it. But also we do have access to the Profit First book. If anyone would like a copy of the Profit First book to read, please let us know. I've got the core chapters that we will send round to you guys on Monday once we've got the recording. Tomorrow or Monday once we've got the recording for the webinar, and we'll send that to you guys as well so that you can watch over it in your own time again. But with the core chapters, it's obviously better that you read the full book as opposed to just the core chapters. So definitely let me know if you would like a copy of the book. I've had no questions in. Exactly. I think that's exactly it. But yeah, as with anything, definitely get in touch. We will send you a follow-up email, as I said, tomorrow or Monday, which will have a recording, a copy of the core Profit First chapters, some Profit First information from the website, and also all of our contact details, so that if you do want to get in touch with one of us, you know how to. And that's it. Thanks very much, Lee, for a really informative webinar. And thank you, Josh, for speaking and talking through your experiences with Profit First. I hope that was useful for everyone. Perfect. Thanks, guys.